All right, guys. So today's November 7th, and it is Friday, and it's currently 9:12 in the morning. I am not in any trades. What we're gonna do is I'm done for trading for today. We're gonna do is gonna go over all the pairs that I trade, and we're gonna go to see the opportunities we could have gotten into trades from last week into this week, okay? And we're gonna see and we're gonna anchor the peak formation highs and lows, and we're gonna see how the market direction goes and where we get into trades. We're also gonna keep in mind that timing is very important. So if you come to trade to the markets, I advise that we trade London session, 3 a.m. Between 3 and 4, you're gonna get some solid entries, and after that, and then New York session, the best times to trade is between 9 a.m. to 10 a.m. But because that's the main volume of these sessions of when they happen. Once again, London 3 a.m., 3:30, 3:45, you're gonna get solid entries. And then New York session 9:30, 9:45. And then if you typically have a setup within those time frames, within the time frames is great opportunity to sell. And if you have a setup, it can go pay out a lot because that's the main part of, like I said, of these sessions. And that's what you call it, the Brinks trade. The Brinks trade is if you take a sell, you're gonna see how the market's gonna trend in the right direction, and it's gonna pay out if you get the perfect entry. So, anyways, here we go. We're gonna I'll start off with this is NAS 100, so we can see that right here peak formation high. So when we anchor a peak formation high, we expect 2 to 3 to 4 days of drop. This is exactly what we see this. This is a peak formation high. This is what we have here. So what we expect this next day, drop. This next day, drop. The next day, drop. Here, we expect drop, but we can see that we had a bullish move, and then this day drop, and then this day drop. So pretty much what this was, just a pullback, okay? And we're gonna go over that now. So over here, 3 a.m., you can see that, like I said, we had anchored the peak formation high. We had a first leg, second leg, and even a third leg. And then this line right here is 9 a.m. Look at how you have one, two, three bearish candles. You could have taken a sell, especially right here. Once this red candle's closing below the 13 EMA catch up, that's your entry, and we would have profited towards the end of the day. This here out of Asian session is uh W pattern to the upside, but this is called a stop hunt. This is inducing buyers to finally turn around. This line is 9 a.m. You have a strong bearish candle. You have another one here, another one here, and then 9:30 is this big volume candle here. So anywhere and any of these areas you could have sold, you would have sold that to the downside. Here we have another bullish move from London into New York. We trapped over here yesterday's high of the day. Then we get a high volume candle close, a second volume candle close. This is our entry right where this bearish red candle is closing below the 13 EMA catch up. And then we take this to the downside right here. And if you would have sold here and you would have hold, you would have gone pull back right back up, and then we would have profited big to the downside. Now here, the very next day, we had a W pattern, London into New York. Some of you guys would have taken a counter trade here to the upside, but then we created here, M pattern here, micro M, and then here's the volume. 9:30, 9:45 into 10 o'clock. Your entry is right here. Any of these bearish candle close, because I like for the candles to close below the 13 EMA catch up for you to take your sell to the downside. This day on Wednesday, we had a big fat first leg, second leg out of London into New York. Look at this yellow dot here. Look at how you have one, two, three, four bullish candlestick close. This one over here closed above the red EMA. This is our entry. And I got into a trade here. I took this buy all the way to the upside. Here on Thursday, we have first leg, second leg out of London. London traders could have profited with this big move to the upside. Here we're using the 800 EMA Blueberry as a resistance level. This high right here was formed. It did not take out that high. And then once again, This yellow line is 9 a.m. Here goes one bearish candle, two bearish candles. This bearish candle is closing below this red EMA. Here's our sell, 8:45 into 9. And if you would have sold this, you would have profited heavy. Today, Friday, you have uh this pullback out of Asian into London. We're using the 50 A water as dynamic resistance and perfect timing. This is 3 a.m. Look at how this candle closes bearish into 3:30, right? This is our perfect entry for sell, and then we would have been in profit here on NAS 100 to the downside sells. These are clear patterns and these are clear formations in NAS 100. Uh, we're gonna go here now to GBP USD. GBP USD gave us a bullish triangle, peak formation low. Look at how here out of Asian into London into pre-New York gives us a second leg, a third leg, bullish engulfing candle close. This was our buy to the upside and GPUSD. Very next day, 3 a.m. Look at how here we're using the 50 EMA as resistance as support. Look at 3:30 a.m. Strong bullish engulfing candle, buys to the upside. Here during New York, another pullback to the water, continuation to the upside. Here we have a peak formation high, but as you can see, Asian into London, support level reached, support at the 200 EMA water. I got into this trade right here with this bullish engulfing candle close above the ketchup red EMA, and I took this buy to the upside. And I took out on profit on GU here, and I uh profited here almost from here to here. Right now, I closed out 30 pips. Euro USD, we're gonna take a look at now. Euro USD gave us uh big fat W pattern here. In on Tuesdays, first leg of the W was given in New York, pullback during Asian. Another second leg right here during New York on Wednesday. All these candle bodies here are closing above this aqua line. This aqua line represents yesterday's low of the day. None of these candles close below that level. That is telling you price rejection. That is letting you know that over here we are going to take off to the upside. These were buys on Euro USD. Thursdays we got a continuation move during London session. London session here 3:30, 3:45 into 4 o'clock. These were our buys to the upside. What do we expect here? We got the anchor point of this peak formation low, right? And then once we anchored this, we expect 1, 2, 3 days of rise. That's why today, Friday, to end the week, we have this first leg out of Asian into pre-London. Give us a little micro W here. Timing, timing, timing. 3:30 in the morning hits. Is this 10:30 London time, but it's 3:30 Eastern. Look at this big, strong, bullish uh candle close right there at 3 into 3:15. I put a buy right here and I rode this Euro USD move to the upside. The market is currently right there. From here to here, I guarantee you this is at least 30 pips, if not more. And this was the move out of London into New York. And like I said, we have 1 day of rise, consolidation, 2 day of rise, consolidation, 3 days of rise. And I believe right here we've completed our cycle. Let me backtrack to this peak formation high, and then we're gonna see that the cycle here completed with this strong move to the downside. We had uh, a big fat M in your face. Peak formation high formed. What do we expect the next day? Stop hunt high, sells to the downside, drop, consolidation here out of Asian into London, pre New York. We got this M formation here. This high did not take out that high. This strong bearish candle close right here below the catch-up sells to the downside. Consolidation. First leg, second leg, these could have been buys during New York, but if you take these buys, we're trading against the trend. So a better entry would have been to wait for Tuesday, and then Tuesday we had this W pattern motivation into London, pre-London right here. We found resistance here at the white EMA, which is the mayonnaise. Bearish candle closures right here, especially this one here below the ketchup red EMA. These are entries that I like to take once the candlesticks are closing below or above the red EMA, and then these were sells. And now right here is where we anchored our first, second leg, like I mentioned before, and this was our peak formation low. This cycle here was completed, and the next cycle here is completed today. This was Euro USD, and then finally USD CAD. Right? If USD CAD, if the pound US dollar and the euro US dollar are bullish, expect USD CAD and USD Swiss to be bearish. This is exactly what we get today in USD CAD. We got a big fat M pattern. We anchored the peak formation high. Once this is anchored right here, what do we expect these following days? Sells. That's why right here at London session, 3:30 a.m., I was a seller. I put my stop loss above Asian's high, and look how massive the market massively dropped. I took profit right here at the blueberry, and this was the move today on USD CAD. I profited here as well. And then finally, USD Swiss. We have Uh, a a big fat M right here given to us on Wednesday. Peak formation high is anchored. What do we expect? Oh, and look at this bearish triangle. What do we expect this day? We expect to drop. What do we expect this day? To drop. This is an M pattern out of Asian into London. All right. And then another third leg. So this is a triple top or shoulder, head, and shoulder. Sells to the downside. Asian into London, a stop hunt high. A pink dot formed. Resistance at the 200 EMA mayonnaise. Bearish candle closures right here below the ketchup. And this was our sell and USD Swiss. Take profit right here at the blueberry. We're done for the week. Let's go.